Well, if you weren't sure if Anthony Fauci was corrupt, well, now you can guarantee that the people that work directly under him are. The Wall Street Journal published a very good article yesterday. And I'm going to go through this and we're going to read it. And it's going to outline some of these trades that took place. And then I want to walk through the timing of these trades. For those of you that don't know, I actually work in the financial industry. I have for the last 7-8 years of my life, ever since I've been out of college. I have Series 7, 65, 6, 63 investment license. Any kind of investment license you can think of, I have it. So when I'm talking, I'm kind of basing this off of some experience. Now, the article says, in January 2020, the U.S. public was largely unaware of the threat posed by the virus spreading in China, but health officials were on high alert and girding for a crisis. A deputy to top health official, Anthony Fauci, reported 10 sales of mutual funds and stocks totaling between $157,000 and $480,000 that month. Collectively, officials at another health agency, Health and Human Services, reported 60% more sales of stocks and funds in January than the average over the previous 12 months, driven by a handful of particularly active traders. Now, a couple things to kind of break that down. They did mention that this is driven by a handful of particularly active traders, which means that it's people who do look out in the stock market with their own accounts, and sounds like these are people who readily make trades. When it comes to January 2020, what people got to realize is the Dow, and I'm just looking at the Dow, but I believe the S&P and the NASDAQ as well, had hit an all-time high, and I have it pulled up here. It looks like on January 17th. I will have to go back and look at the dates that these trades were reported for, but the Dow had hit 29,348. After that is the first kind of sell-off, and it's just a small dip. And what I'm curious of is if that small dip has anything to do with a bunch of federal employees making trades on that day. That's around the time COVID started, becoming more and more known in the population. Obviously, the federal government would have long had knowledge of the threat that's going on here, especially people in the health departments. So there's kind of two parts to this. As far as active traders making, selling off a bunch of stock, well, again, Dow hits an all-time high. But the fact that it's 60% more stock sales and funds with people that work either under Fauci or in Health and Human Services only kind of blows that active trader part out the window for me. Now, furthermore, it says, by March, agencies across the government were working on wide-reaching measures to prop the economy and markets. Then Transportation Secretary Elaine Chao purchased more than $600,000 in two stock funds while her agency was involved in pandemic response, and her husband, Republican Senator Mitch McConnell, was leading negotiations over a giant market-boosting stimulus bill. Now, that one right there, that's bullshit. Obviously, there's insider knowledge going on there. Huge conflict of interest for Mitch and his wife. That's just, if it's going to be a senator or a representative in this instance, specifically, especially in the timing of March and April, or when was the next one, December, or the next year in March when Biden did his, that's just sketchy. That's why Pelosi's trades, again, it's not about what stocks you're trading in. It's about the timing and the intent behind them and the knowledge that that no one else does. It says, and as the government was devising a loan package aimed specifically at helping companies, including Boeing Company, General Electric Company, a Treasury Department official involved in administering the aid acquired shares of both companies. Boeing got a huge bailout, and I believe General Electric did. I'm not 100% sure what the number that General Electric got. But I do know Boeing got a substantial amount from the government in regards to stimulus package. Boeing's stock price almost doubled when the stimulus package came out as well. Federal officials owned millions of stocks in industries most affected by the pandemic. In the government's response, about 240 officials at health agencies and at Pentagon, a key player in the vaccine rollout, reported owning a total of between $9 million and $28 million in stock of drug manufacturing and biotechnology companies that won federal contracts related to COVID-19 in 2020 and 2021. $28 million of the $28 million invested between the health department and the Pentagon in companies that received COVID-19 government contracts. And people actually want to give the government more power. Jesus Christ. Nearly 400 officials across 50 agencies reported owning stock in airline, resort, hotel, restaurant, and cruise companies in early 2020, the review found. By March, every major agency was drawn into the pandemic response. The month was the most active for trading by officials across the federal government, including HHS, the Journal's analysis of financial disclosures forms for about 12,000 officials spanning 2016 and 2021. Federal officials reported more than 11,600 trades that month, 44% more than any other month in the analysis. Now, March, for those of you that don't know, the market bottomed out on March 20th of 2020. That's when I say the market, I'm saying the Dow's, the chart I have pulled up here, at 19,173. It could have been a little bit lower during that trading day, but I'm showing the 20th. I thought it was the 21st, but I guess I could be wrong. March 20th. The whole month of March, starting February 14th all the way to March 20th, was nothing but a massive sell-off in the market. So March was the best time to be buying stock and getting that stimulus uprise. All through April and the rest of the year, all the way up until August. There was another small sell-off in August, but really the rest of the year up until 2022, the stock market rose. So 44% higher in trading by federal officials. First of all, makes you wonder if they were so busy in the health department, where were they getting time to make these trades? The other thing no one's ever talking about, and a doctor that is brought up later on in this article that made some trades that said he wasn't aware of that and that it was a financial advisor that made the trades, is the advisors of these people. Like, let's take Pelosi. Let's say her husband isn't making the trades, but an advisor is. If the Pelosi's are sharing information with the advisor and the advisor is making trades based off of inside information, it's actually still insider trading on the advisor's behalf. So if it's not insider trading, if we're not going to hammer them on insider trading, what about the advisor? Insider trading is going on. Like, it's not because, oh, there's another layer there that it wipes out what insider trading is. No. If the advisor is making trades based off of inside information, whether it's on behalf of himself or a client, it's illegal. Now, it says federal employees are barred from working on matters in which they have a significant financial stake, from trading on non-public information learned on the job, and from taking any official action that creates an appearance of conflict of interest. That's already been long past a conflict of interest here. So it says 3 days into January 2020, top U.S. officials were alerted to an unexplained virus sickening people in China. By late January, Centers for Disease Control, the CDC, and prevention leaders were rushing to develop accurate tests. National Institutes of Health, the NIH, were taking the first steps toward developing a vaccine, and Food and Drug Administration were racing to facilitate prevention and treatment options for the novel coronavirus. Again, the market, all the way up until February 14th, was still rising. Again, there's a small sell-off starting January 17th all the way to January 31st. But even in the first half of February, the market actually recovered and went back to an all-time high at 29,398. So the first half of February, the market still hadn't adjusted, and the market is forward-looking, by the way. So you can tell that the market had no forward knowledge of any kind of threat until February 14th, which means that they were basing trades in January on information that they knew and the market didn't. It says, on January 24th, 4 days after the CDC publicly reported the first confirmed U.S. COVID-19 infection, Hugh Auchincloss, principal deputy director at the NIH's National Institute of Allergy and Infectious Disease, summed up the state of his agency in an email. New coronavirus all the time. That same day, while stock market remained lofty, Dr. Auchincloss reported selling 15,000 to 50,000 of a stock mutual fund. Days later, he sold 2 more mutual funds and a stock. That stock was Chevron. According to his financial disclosures, which give wide dollar ranges, that was just the beginning. Yeah, so if you do look at some of these disclosures, it says between like 15,000, 50,000, or 50,000 to 100,000, or 100,000 to a million. It gives, it doesn't really have the exact, it's just a range. On the last day of January, an email sent to Dr. Auchincloss and his boss, Dr. Fauci, signaled the severity of the threat. Public health service officers had been told they could be deployed, a health official wrote, and could assist with quarantine efforts. This is January 31st. Again, the market was still recovering from a small sell-off and reached an all-time high after this. He had already sold off his stock, knowing that before anybody else that we were probably going to go into this shutdown. Dr. Auchincloss disclosed 6 sales of mutual funds that day, totaling between $111,000 and $315,000 in value. Here's the thing. That right there, that's bullshit that he did that. He sold off on that day knowing that he could have to assist with quarantine efforts. He sold off mutual funds. Mutual funds do the trading for him, so it's not like he's out there day trading mutual funds. He's not actively trading the funds that were being sold in his account, which means he just said, you know what, I don't want to take the chance. We're selling off. That's January 31st. Again, on January 31st was when the market reached the bottom of that sell-off. And he would have, I don't know which way it's going to go. It wasn't a major sell-off, by the way. If you look at the sell-offs from this year, the dip from January 17th to January 31st was only about 1,000 points in the Dow, which went from 29,300 to like 28,256. And again, recovered after that. His January sales amounted to the largest number of transactions he had reported for a single month since 2018, according to his financial disclosures. Again, in 2018, rates rose, and the market started tanking again. So it kind of, I wonder if he had some of this knowledge before. Moving on. Dr. Red, another doctor with the CDC, said that the CDC data had a clear view of the virus's threat by the end of January. Dr. Red later told a student interviewer in Atlanta it was easy to see it was going to be a really big problem. Dr. Red disclosed sales between $95,000 and $250,000 in stocks and bonds in January. He reported the sale in February of $101,000 to $250,000 of bonds, along with purchases between $2,002 and $30,000 of short-term bond funds, a low-risk investment. So you put in short-term bond funds, usually have lower yields. By the way, the government lowered interest rates, or the Fed, lowered interest rates during that COVID period to try and get money. Rates dropped to almost zero. So that means that this bond fund actually would have appreciated in value during that time. Now, the one thing to consider, I don't know what the percentage of his portfolio is, or any of these guys' portfolio. If it's like 1%, then that's not a big deal. It is because the information they sold it on, but I don't think that it's 1% of their, I don't think that's the case. It could be, but I think that these are major portions of their portfolios potentially, and they were definitely taking advantage of this insider knowledge. So the article goes on now. It says, as the pandemic toll mounted, Congress in mid-March was negotiating with the administration over a package providing funds for individuals and companies hit by the fallout. The rate cuts hadn't immediately calmed investors. Stock trading was halted for 15 minutes on the morning of March 16th, when the S&P 500 fell 7%, triggering a so-called circuit breaker. The index staggered to the closing bell, down 12%. The same day, Ms. Chow, the transportation secretary, made 3 purchases in stock funds that track the S&P 500 and the U.S. stock market broadly, totaling between $600,000 and $1.2 million. Again, Elaine Chao is Mitch McConnell's wife, according to her financial disclosures. After Republican frustration with the previous piece of relief legislation, Ms. Chao's husband, then Senate Majority Leader Mitch McConnell, had taken the reins in Congress on a much larger bill. He released his draft on March 19th. March 20th was the bottom end of the stock market in 2020. So literally 4 days prior to the bottoming out of the stock market, and the day I believe that had the biggest drop, Mitch McConnell's wife purchased S&P 500 index funds. Substantial amount too, by the way. Actually more than what she sold off earlier. Where do I stand with this? Okay. The article went on and also mentioned another person, the Treasury Domestic Finance Director, who made a purchase in Boeing and a couple other stocks after Trump had come out and said that they were going to financially support Boeing. The government was going to basically help Boeing. To me, that's not insider trading. To me, that everyone went and did that. I made trades, after this market started rising. A lot of people did. That's not insider trading to me. First of all, I don't think that federal employees, I don't think our senators and representatives for sure should be allowed to trade in individual stocks. Allowing them to trade in mutual funds or index funds, I'm okay with. Ones that track American companies. But, when it comes to the insider trading, especially in our government, I get extremely aggravated. I don't mind it so much in the private sector because usually it's like 1 or 2 people and they don't have the control that the government has. But when it's our federal employees, and especially the ones that have a substantial amount of knowledge and power over market influences like passing stimulus packages, that's wrong. It's so outrageous that they're allowed to do that. And it's so outrageous that we don't hold them accountable. It doesn't matter if you're a Republican or a Democrat, because a lot of people lost their ass during that time. And they lost their ass because of things that the federal government did, like quarantine. The federal government is the one that shut down the economy. And the fact that those people didn't have to reap the consequences of their decision is what bothers me the most.